Welcome to the deep dive. Today, we're cutting through the noise of a major earnings call. We're looking at Verizon Communications, Inc.
Yep, we've gone through the Q2 2025 earnings transcript, the press release, the whole presentation deck, really, to figure out what's actually important for their performance now and, where they're heading.
Our mission, as always, is to translate that dense corporate speak into something clear, compelling takeaways for you.
Let's get into it.
So let's unpack this. How is Verizon accelerating its performance in this, well, super competitive market? Okay, kicking things off, Verizon reported a really strong second quarter for 2025. I mean, really strong.
Yeah, the numbers look good. Consolidated revenue hit $34.5 billion.
Which is up a solid 5.2% compared to last year, right?
Exactly. And what's really driving that, or a big part of it, is their wireless service revenue. That climbed to an industry-leading $20.9 billion.
Okay. 2.2% jump there. Is that mostly from getting more per customer?
Pretty much. Higher average revenue per account, ARPA, and also some pricing actions they took earlier.
Right. And how did that translate to profit?
That's where it gets interesting. Adjusted EBITDA, basically their core operating profit before, interest and taxes and stuff, reached a record high, $12.8 billion.
Wow. Okay.
Yeah, that's a strong 4.1% increase year over year. And this is the second quarter in a row they've actually beaten their own guidance range.
So they're executing really well then. Lean operations.
Seems like it. And that strength flows down. Adjusted EPS, earnings per share, jumped 6.1% to $1.22, directly linked to that EBITDA performance.
And it sounds like they're feeling pretty good about the rest of the year, too.
Definitely. They raised their full year 2025 guidance pretty much across the board.
Okay, what are the new numbers?
Adjusted EBITDA growth, they're now expecting 2.5% to 3.5%. That's up from 2.0% to 3.5% before.
Small bump, but still positive.
Right. Adjusted EPS growth, now looking at 1% to 3%, up from flat to 3%.
Okay.
But the big one, I think, is free cash flow. They boosted that guidance significantly. Now $19.5 billion to $20.5 billion.
Whoa, that's quite a jump from the previous range. Wasn't it like $17.5 to $18.5 billion?
Exactly. And they noted about $1.5 to $2 billion of that benefit is coming from recent tax reform.
Ah, okay. So external factor helping there, but still, that raised outlook signals real confidence.
It really does. It shows, discipline in a tough market. It feels like their investments in C-band and fiber are actually starting to pay off in terms of revenue and efficiency. Gives them a lot of flexibility.
Which brings us to customers, right? These financial results need people signing up and sticking around.
Absolutely.
So what did the customer numbers look like? They reported over 300,000 net additions overall, combining mobility and broadband.
Yeah, a decent number. Breaking it down on the mobility side, consumer postpaid phone net losses, they still lost customers there.
But it improved.
Right, significantly improved.
Yeah.
Only 51,000 net losses this quarter compared to losing 109,000 a year ago.
What drove that improvement?
Strong gross adds. They have more new customers signing up, both compared to last quarter and last year.
Okay, that's the consumer side. What about business phones?
That was a bit weaker. Business phone net adds were 42,000. That's down quite a bit from 135,000 last year.
Any reason given for that drop?
Yeah, they pointed to pressures in the public sector business specifically. Said a significant majority of the decline was from there, and they kind of expect that to stick around.
Okay. Anything on prepaid?
Actually, yeah, a bright spot. Core prepaid net adds were positive, 50,000. That's a big swing, like a 62,000 improvement year over year.
And is that a trend?
Seems to be. It's their fourth straight quarter of positive core prepaid additions. And the revenue per user, the ARPU, is up over $32. They expect prepaid to actually help wireless service revenue growth for the rest of 2025.
Interesting. Okay, so net adds are a mixed bag, but improving on the consumer side. What about churn? Customers leaving, that's always the battle, isn't it?
Always. Consumer postpaid phone churn stayed basically flat with Q1 at 0.90%.
And their reasoning?
They mentioned residual effects from their own price changes back in Q1.
Yeah.
And also elevated competitor promotional activity.
Sounds a bit like blaming the competition. Are they doing anything specific to fight that churn?
They are. They launched some new things on June 24th, using AI for more personalized support.
Okay.
Beefing up their value propositions like that best value guarantee.
Ah, yeah, I've heard about that.
And offering exclusive stuff like event access through their Refresh app.
Is any of that working?
Seems like it might be. The postpaid upgrade rate, so Existing customers getting new phones, that actually rose 14% in the first half of the year compared to last year.
And they link that to the best value guarantee.
Directly, yeah.
Yeah.
They expect mid-single-digit growth in upgrades for the whole year. So while churn pressure is real, their own actions seem to be making a difference in keeping customers engaged.
That's clever, meeting customers where they are.
Yeah.
And speaking of that, the sources mentioned they use, what, 8 or 9 different brands?
Right, a segmented approach.
Trying to appeal to different budgets and needs, I guess?
Exactly that. Not a one-size-fits-all plan, it lets them target different parts of the market, from premium down to more value-conscious segments, a way to broaden their reach.
Okay, let's switch gears to the network itself, the foundation for everything else. They keep winning awards, right?
They do. J.D. Power recognized them for the best wireless network quality again. That's the 35th time.
35th. It's almost like, did they just pre-print the award now?
Maybe. But seriously, RootMetrics also named them the nation's best, fastest, and most reliable 5G network just now for the first half of 2025.
So that consistent recognition, what does it really mean today when everyone's talking 5G?
It means a real competitive edge, especially for customers who prioritize performance and are willing to pay for it. It's a huge differentiator. And they're backing it up with deployment.
How so?
Their C-band deployment, that crucial mid-band spectrum for fast 5G with good coverage.
The sweet spot.
Exactly. It's actually running ahead of schedule. They're tracking to hit 80% to 90% of their planned sites by the end of this year, 2025.
That's fast progress. And fiber.
It's also ahead of plan. They're targeting 650,000 new locations passed with fiber this year alone. Shows strong execution on infrastructure.
And their fixed wireless access, FWA. That home internet service using the 5G network.
Still growing strong. They just passed 5.1 million subscribers.
And they have that big goal, right? 8 to 9 million by 2028.
Yep, still on track for that.
Hmm.
They said demand is strong even though fewer people are moving house right now.
Interesting. And the traditional Fios fiber internet.
Still adding customers there, too.
Yeah.
32,000 net adds, which is actually up a bit from 28,000 last year. So continued demand for high-quality fiber.
Okay, and wasn't there a big acquisition in the works? Frontier?
Yes, that deal remains on track. They said most regulatory approvals are in. They expect it to close in the first quarter of 2026.
And they're already planning the integration.
Well underway, apparently.
Yeah.
It signals they're really serious about accelerating that fiber build-out and getting deeper into the broadband market.
So network build-out is key, but also how they package it. You mentioned the customer offers earlier. My plan, my home, best value guarantee.
Right, my biz plan for businesses, too.
Yeah.
These aren't just marketing names. They seem to be part of a strategy to drive sales by focusing on, clear value for different types of customers.
Like the best value guarantee, trying to remove anxiety about plan choice.
Exactly. Build trust, reduce churn. And as we saw, it seems to be helping with upgrades. What's also super interesting is their increasing use of AI.
You mentioned AI for customer support.
Yes, but it's bigger than that. Their AI Connect sales funnel, this is for enterprise solutions, selling high bandwidth fiber and stuff to businesses.
Yeah.
That pipeline has nearly doubled.
Doubled. Since when?
Since they launched it earlier this year, it's hit almost $2 billion now. Shows huge demand from businesses needing serious connectivity, maybe fueled by their own AI needs.
So AI is driving demand for their core network products.
Seems like it. And Verizon's betting that compute power right at the edge of the network is going to be crucial as AI becomes more widespread and needs real-time responses.
Makes sense. And on the flip side, are they finding cost savings too?
They are. That voluntary separation program, the buyouts, that's complete now and generating, they say, substantial savings.
Okay.
And they expect more efficiencies from shutting down old copper lines, transforming how they handle managed services for businesses. It's all part of being disciplined.
Discipline how?
By not just chasing any deal. They specifically said they're avoiding low-margin wireless business, not overpaying just to get subscriber volume, focusing on profitable growth.
Which clearly helps those bottom line numbers we talked about earlier.
Absolutely. It all ties together.
Okay, so let's tie it together financially. How's their overall balance sheet looking? Debt.
Improving. Net unsecured debt is down to $116 billion. That's almost $7 billion better than a year ago.
And the ratio, debt compared to earnings.
That key ratio, net unsecured debt to adjusted EBITDA, is down to 2.3 times, 0.2 times lower than before. Solid progress.
So less debt, strong cash flow coming in, especially with that tax benefit, gives them options, right?
A lot of options, yeah.
Yeah.
Good flexibility. And their priorities for using that cash haven't changed.
What are those again?
Number one, invest in the business. Keep enhancing the mobile and broadband networks. That's core.
Makes sense.
Number 2, support the dividend. Keep it healthy. Keep it growing. They've raised it for 18 straight years now.
18 years. Wow. Good for shareholders.
Definitely. Number 3, pay down debt. Keep working towards their long-term leverage target.
And then maybe buybacks?
It's 4th on the list.
Yeah.
They'll consider buybacks once they hit that leverage target, especially, they noted, after the Frontier deal closes and they see how things settle.
Got it. One more financial point: capital expenditures, the money they spend building stuff. Was that up or down?
Actually slightly down for the first half of the year, $8 billion compared to $8.1 billion last year.
Huh. Even with C-band and fiber rollouts going strong.
Yeah, which suggests they're getting more efficient, finding ways to deploy C-band and expand Fios without just throwing more money at it. Maybe better processes, better supplier deals,
Optimized spending. That points to good management.
You could say that. Very disciplined approach to both investment and costs.
So, wrapping this all up, what does this quarter really tell us? What does it mean for you, our listener?
Well, Verizon's Q2 really paints a picture of a company navigating a, let's face it, tough, competitive market pretty successfully. They're doing it by focusing hard on strategic investments, network, customer experience, but doing it profitably.
Right. That discipline seems key. Improving financial flexibility while still investing.
Exactly. Their approach to growth, managing costs, it's clearly working and putting them in a strong position.
Okay, here's where it gets really interesting, though, looking forward. We see AI transforming everything, right? How we connect, interact.
Yeah, it's huge.
And Verizon's building out all this new fiber infrastructure. How are the strategies we just talked about, the network focus, the AI integration, the customer plans, how is that going to shape not just their future, but the actual services you rely on every day? Think about smarter customer support, maybe faster home internet.
That really brings up a big question for all of us, doesn't it? As these big players like Verizon double down on AI-powered services and push their networks further and faster, what new possibilities does that unlock? But also, what are the new challenges for you as a consumer, for businesses?
Yeah.
What changes as these advanced technologies just become, well, the new normal?